Okay, so today we are going to start with a new chapter and a very important chapter, company final accounts. Now, this chapter is 11 marks in your board exam, and from this chapter, one sum is expected. Now, first, let's understand what exactly we are going to study over here. So far, we have seen final accounts, of sole proprietor, final accounts of partnership firm. Now, for these two, we were basically using a T-shaped format for profit and loss account, trading account, then for partnership we had P&L appropriation account, and of course partners capital account, and then the balance sheet. So this is what we were using to make the final accounts of sole proprietor or for partnership firm, as the case may be. If it is sole proprietor, only trading P&L balance sheet. If it is a partnership firm, trading P&L appropriation, partners capital, and balance sheet. But as you can see, everything is a T-shaped format. Now, when we go for final accounts of company, now what is so different over here? See, first let's understand what is a company. A company is a company as defined or as incorporated under Companies Act. Earlier it was a 1956. This was earlier. But now we have new Companies Act that is for the year 2013. So year 2013 we had a new Companies Act, and because it's a company registered under Indian Companies Act, so we have to follow the rules and the regulation as given in the Indian Companies Act 2013. And very surprising is that the Company Act itself is prescribing a format for final accounts for companies. So there is a prescribed format and we all have to follow that format only. So we cannot go for this type of a T-shape format or this type of format, this type of format. So we have to follow the format as given in the Companies Act as per Schedule 3. You may write it down. This is important, as per Schedule 3 of the Companies Act 2013. Now, because we have a format, so we will have to follow that particular format which is given in the Companies Act. We cannot deviate from that format. So here the crux of this discussion is that you have to learn the formats properly. If you know the format, you fill in the numbers, you get full 11 marks. A full-fledged sum of 11 marks is going to come in your board exam. So very important, just like the way you are writing statistics formula daily, you should cultivate the habit of writing format of a balance sheet and profit and loss daily, so that the format is very clear in your mind, and any sum comes, you know the format, put in the values, you get full marks. So it is basically a format based chapter. So very important, you have to remember the format. Now format B is not like something very different, okay? It is It is a very simple format, just like we were doing this balance sheet in a horizontal format where we had a capital and where we had assets and we had liabilities. Here, similar type of format, but in vertical format. Similar type of data, but in a vertical format. So nothing so different, just different form of recording the preparing the balance sheet and profit and loss. So here every day you have to write the format for balance sheet and profit and loss. Now let's come to the textbook and let's see some theory. Come to page number 116. Come to page number 116. Now, this chapter 3 you can write over here 11 marks, only single sum in your board exam. Now, let's go through it. Now, please underline this. Section 129(1) of Companies Act 2013 lays down that financial statement shall give a true and fair view of statement of affairs of the company or companies. Now, we all know that ultimate goal of recording of the transaction is to know the true financial position of the company. And to know the true financial position of the company, we prepare final accounts where we know what is the exact position. So this is what you need to underline. Now, they should also comply with accounting standard notified under section 113 and shall be in the form or forms means in the format as may be provided for different class or classes of companies in schedule 3. This is important. Now, I just skip this remaining part. Now, come to this point, meaning of financial statement. Now, what exactly are the financial statements we need to understand? Financial statement are statements presenting accounting information in brief at the end of accounting process for an accounting period. Financial statement provide information regarding financial results to its internal and external users. Now, internal यानी the companies, employees, the management, and external users यानी shareholders, creditors, okay, investors, as per section 2 subsection 40 of Companies Act. This is important. Financial statement in relation to company include. So what exactly are the financial statements of a company? If someone say it's a company, so what financial statements you have to prepare? So you will say a balance sheet at the end of a financial year, a profit and loss, in case of an entity loss, or in case of an entity on any activity not for profit, we will use income and expenditure account. If it is not for profit, then very important cash flow statement. We have a chapter, the last chapter is cash flow statement. A statement of change in equity. So any change in the equity if applicable. And the fifth one, notes related to accounts. Now this is important. You should learn irrespective of it is asked in the exam or not. Now, balance sheet shows what? It shows financial position as at a particular point of time. So balance sheet is at a particular point of time and hence its title should be balance sheet as at profit and loss. Profit and loss statement shows financial performance for the period ended on a particular date. So it is for a period ended on a particular date, which is usually a year. Hence, its title should be profit and loss for the year ended. Now, profit and loss, okay, in case if I'm starting the company in the mid of the year, then it will not be for the full year. So there we mention it will be for 6 months or 3 months or whatever. Okay. Now, it is also said that this is for you, just for your knowledge, that balance sheet is a point statement because it is prepared at a particular point of time. I'll just write over here, balance sheet is a point statement. Whereas profit and loss account is a period statement because profit is for a period. Okay, 1 year, 4 months, 5 months, 6 months, 15 days, whatever. So it is a period statement. So very important statement for you to understand the concept. Balance sheet यानी financial position of the company at a particular point of time. So if I say 30th, 31st March, it will be the position as on 31st March for a particular year. But when I say profit is for the full tenure of 1 year generally. So you may write this. Now, financial year, we all know what is the financial year. So generally financial year is of 12 months for the period starting from 1st April and ending on 31st March. So this is what is the financial year. Okay, again, that is defined as per Companies Act 2013 under section 2, subsection 41. So as you can see, everywhere what we are reading, it is defined under some section or subsection or some schedule of Companies Act because it's a company. So any company which is registered under Indian Companies Act has to go through this particular format only or these particular rules only and to follow this act only. They cannot deviate. Okay, unlike partnership or sole proprietor, in partnership we do have a partnership act, but partnership act does not prescribe a format of balance sheet and profit and loss, whereas Companies Act prescribes a format for profit and loss and balance sheet. So we have to follow that so that there is a comparison uniformity. So every company will be following the same format only. You pick up financial statement of any company, you will find the format remains the same. So that can easily be compared. Okay, that is why there is this standardization. So characteristics and all, you do it on your own. Now, when you come to page 117 and page 118, you can see this format. Okay, that balance sheet, name of the company, balance sheet as at particulars, note number. Okay, because why there is this note number is because share capital may just not be equity. It can be equity, it can be preference, it can be different category of equity share or preference share. So that is why there is this note so that we know what all are the details. So note number, figures at the end of current year and previous year. So these 1, 2, 3, 4 columns are there. Now, this is the format which is prescribed by Companies Act. Okay, it's a comprehensive format, but for you, because it's just a beginning for you to study companies' final accounts, our Gujarat Board textbook has removed few things and made a simplified format for you. So we will directly go to that. Statement and profit and loss, I'll come later. So you can see over here, which is page number 126. So please come to page number 126. Please come to page number 126. Now, over here, on page number 126, you can see something is given in bold and that is always useful to us as students कि क्या है क्या निकाल लिया है. तो you can see balance sheet and statement of profit or loss as per schedule 3 of Companies Act 2013 are given only for explanation. So far what format you saw while flipping the pages was just for explanation. For the purpose of examination, balance sheet and statement of profit and loss and their subheads shown below are to be considered. So we will have to follow this particular format. So you can see the format over here. This is the format what I'm talking about, which you have to learn by heart. So every day you have to write this format. Now you can just have a view of this, and then we will be making this format, okay, in notebook. So make a similar format, okay, in your notebook, and we will write this format, and while writing the format I'll explain you different headings and all the important things. Okay, so please make a format like this please. Now details of you can see that this notes on heads and subheads of balance sheet is also to be learned, but top priority is to be given to this main format. Okay, this sub notes and all later on we will take care of it. First we are going to learn and study this format. Okay, so now we are going to see this format of balance sheet. So you will have to write the heading, balance sheet of what company, and over here particulars, and then you have note number and the amount. Now when you do actual sum, we will have inner column amount and outer column. But as of now, amount. Now very important, the first heading what we write is basically I'll use this number 1, equity and liabilities. This is known as the balance sheet heading. Write in the bracket balance sheet heading. Okay, now this you don't have to write in exam. It is for your understanding. So this is a balance sheet heading. Okay, so this title, equity and liabilities, is known as a balance sheet heading. Now the first one is shareholders fund. Now this is known as the main heading. So you please write in the bracket main heading. Okay, so that you know balance sheet heading is equity and liabilities, just like we used to write capital and asset. So equity and liabilities is the balance sheet heading and shareholders fund is the main heading. So this is what you have to write. Now, shareholders fund means what? Shareholders are the owners of the company. So owners fund consists of, in the bracket small a, share capital, note number 1, share capital, note number 1, and B, reserves and surplus, note number 2. Reserve and surplus also belongs to the owners, shareholders. So in the main heading shareholders fund, you have share capital and reserves and surplus. Now A and B, I'll just use this pen, marker pen. This A and B, this is known as subheading. Subheading. So you have balance sheet heading, or balance sheet head, main head, and subhead. Okay, so you have to remember this because to understand the concept of balance sheet, we'll be doing some sums where you have to identify where will a particular type of account will go. Okay, so for that, say for example, preference share capital. So it will go under the balance sheet heading, which is equity and liability, main heading shareholders fund, and subheading share capital. That's why. So you please write this. Now, second one is shareholder fund. As you know, the heading is equity and liability. So you have written equity and an owner's fund. Now we write liabilities, but liabilities are classified into two. One is non-current. Let me write over here. Let me make you understand the concept. Liabilities are classified into two parts. One is non-current and other is current. Now, what is current liabilities? Current liabilities are liabilities which are to be paid generally in a period which is less than a year. Which is less than a year. And non-current means greater than a year, or we can say non-current means long term and current means short term. So you please write this. So you know non-current is long term, more than a year. So you've taken a loan for 1 year, more than a year, 2 years, 3 years, 4 years. And if you have taken a loan for 8 months, 9 months, 10 months, even a year, so that will be a current liability, which is generally to be paid within a year. That is a current liability, like creditors, bank overdraft. Okay, you'll see all these coming in this format. So liabilities are of two types. One is non-current and other is current. Non-current is basically long-term liabilities. So I will write the heading non-current liabilities. Again, non-current liability is a main heading. In the subheading, now we have long-term borrowings. Note number 3. Then we have other long-term borrowing or long-term liabilities, and C, we have long-term provisions. So long-term liabilities is 4 and long-term provisions is 5. Now, as you have written non-current liabilities over here, let me highlight it. Shareholders fund, let me highlight this. Third one, current liabilities. What comes in current liabilities? Current liabilities are short-term liabilities. So the first word comes after current liabilities is short-term borrowings. So this is how you will also have to find a technique to remember the things. Okay, you can use your own technique, or I have given you a format. okay, which I've already sent you on WhatsApp, and I'll just share it with you in a while, which you have to, in which I have given my technique of learning this format. You can develop your own technique. Now, how will you develop that technique is by writing the format again and again. You will start getting shortcuts to remember this. Okay, if you cannot learn it on your own, I've already given the format with learning techniques. Okay, so short-term borrowing, trade payables, other current liabilities, and short-term provisions. Now again, short-term borrowings will be of different types. So 6, then 7, then 8, and then 9. So you all have to write these numbers as well. And then you will have the outer column for non-current liabilities, shareholders fund, and current liabilities, and then the final total. So this is basically your equity and liabilities part. Please write it. In this format, you have to follow the flow. You cannot change the order. So first will always be share capital, reserve and surplus, then non-current, long-term borrowing, other long-term liabilities, and long-term provision. Now you can see that all these three in non-current is long-term. In current liabilities, they become short-term. So those three long-term will become short-term over here, but you also have trade payables. So that is how you have to ensure that you don't miss out anything. You can, another way of you can remember the subheading is that shareholder fund 2, non-current 3, and current liability 4. So 2, 3, 4. So you know that there are 2 subheading, then 3 subheading, and then 4 subheading. Got it? So once you start writing, you will start understanding and developing your own technique. Now let's proceed. Now we go for the second main balance sheet heading, that is assets. So in assets, again assets is the balance sheet heading. Now assets are also classified into two categories. One is a non-current and other is current. Non-current means for long term and current means for a short term. So first, non-current assets. So in non-current asset, we highlight it. In non-current asset, we have the first category, that is fixed assets. Now, fixed assets are further divided into two parts. One is tangible assets, and other intangible assets. So tangible assets again 10, intangible again 11, because we have different categories of tangible. Okay, plant and machinery, vehicle, furniture, fixture, okay, building, land. And intangible, you have goodwill, copyright, patent, trademark, etc. So fixed asset, you have two, tangible and intangible. Then you have non-current investments. Non-current investments means investments which are made for a longer period of time. That is known as a non-current investments. Okay. Then C, long-term loans and advances. Now, what is this long-term loans and advances? Long-term loans and advances is you have given money to someone. That is long-term loans and advances. And D, other non-current assets. So other non-current assets. So जो कहीं पे भी नहीं आता है in A, B, C will come to D. You can see we have other over here also, other over here also, other over here also, and other even in the next. So you have to keep this in mind everywhere there will be other category. Okay. Now second main heading is current assets. Now in current assets, again, current investments. So that is 15. So what type of current investment we have to mention in the note 15. Then inventories. Inventories यानी हमारा जो stock of goods है जो which are lying at the end of the year, it may be raw material, it may be consumable, it may be finished goods, it may be work in progress. So that all details will come in note 16. Then see trade receivables. So our debtors basically bill receivable. Okay. Then the cash and cash equivalent. So cash and bank balances you can say 18. And then E, short term, just like you had long term loans and advances, you have short term loans and advances. It is 19 and F. Other current assets. So other current assets. So other is everywhere. Okay. So this is how you will have a total of non-current asset and you will have total of current assets and then the final total. Now this total over here and this total over here should match. And that is how we say balance sheet is tally. So that is how it should match. Your LHS should be equal to RHS and over here your equity and liabilities should be equal to your assets. So this is how you have to make the format and you have to learn it. You please don't deviate at all from this format because it is prescribed by Companies Act. You can't change the order. You have to go in the same flow. Got it? Now in the subheading internally, if you may change, that should be okay. But these main balance sheet heading, main heading and subheading should remain in this order only. So this is the format which you have to write daily. Now here you can see the format of a statement of a profit and loss for a particular company for the year ending. Okay, so for the year ending we say, so it's profit or loss for the full year. This is a statement of profit and loss. If you remember the chapter debenture, okay, there we were writing the surplus in the statement of profit and loss account debit to debenture redemption reserve account credit. This is the same statement what we were mentioning at that point of time. Now over here it's simple, just the heading. You don't have this balance sheet head and main head and subhead. So first heading is very simple. Again, the best part is you don't have a trading account separately. So this is what only you have to make. So revenue from operations in the bracket sales. So how much amount you are generating from sales. So we write note 1. So first amount over here will be revenue from operations. Second will be very simple, other income. So if we are getting rent or we are getting some interest, okay, or some sale of scrap or something, other income. Then third, now you have the total revenue, which is what? 1 plus 2. So you have to write this. Total revenue 1 plus 2. Okay, and you get this total. So this is the total revenue of the company. Now, obviously, after revenue, from the total revenue, we have to subtract the expenses to derive profit. So you write expenses as a heading, as you can say a main heading, and then subheading you can write what are the expenses. So first is purchases, number 3. Then change in stock. Now this change in stock is basically difference in opening and closing stock. I'm writing like this, difference in opening and closing stock. That is 4. So change in stock, which is difference in opening and closing stock. Then direct expense. Direct expense are those expenses which are directly spent for generating revenue in case of manufacturing, used in manufacturing process, and for trading to bring the goods in a condition where it is ready for sale. That they are our direct expenses. Like you, if you are able to recall, wages, carriage inward, octroi, custom duty, such are direct expenses. Then employee benefit expenses like salary, okay, salary, bonus, employee benefit, employee को जो हमने benefit दिया, that is employee benefit expenses. Finance cost like interest. So you can remember it this way: expenses first is purchase, then change in stock, then you can see C, D, E, F, then depreciation and amortization. Now what is depreciation and amortization? Basically they are very similar way of decreasing the value of assets, but depreciation is used for tangible asset and amortization is used for intangible assets. So 8. And then always there will be other, so you can see other income, so other expenses also, so which all will not come in the above, will come in other expenses. So after doing this, what we get is total expenses. So we have total revenue, and highlight it, and then we have total expenses. Now what? Now we have revenue, we have expenses, so we get profit. Profit before tax. That is what? It's 3 minus 4. And then you have tax. So provision for tax. Now, provision for tax is also provision what we have created for a shorter period of time. So it will come in short-term provisions in the balance sheet. So provision for tax. So again, provision for tax will be some rate which we will apply to this profit before tax over here. And then what we get is the final profit. Profit after tax, which is what? 5 minus 6. So this is also known as PAT. So if you see this PAT, it is profit after tax, which the owners would take home, okay, which is available for shareholders. It's after tax, okay, available for distribution of dividend. So this is what the format is. Very simple format for profit and loss. Revenue from operation, other income, and then expense. You remember purchase, change in stock, then direct expense, employee benefit, DEF, finance cost, then depreciation. Never forget it. And amortization, and always the last one जो कहीं पे भी नहीं है, other expenses. Once total revenue, total expense, you get profit, which is before tax, then we make a provision for tax, and then finally we get profit after tax. So this is the format for profit and loss, which also you have to write daily and learn. Now, all this is given on page number 127. So if you can open this format, fine. If not, you can watch this format over here. Now, this is basically the details along with the balance sheet heading, main heading, subheading, and what all comes in subheading, so that you get a fair idea of where every account will go in the balance sheet under what subheading, subheading under what main heading, and main heading under what balance sheet heading. So please try to understand. You also have to write this format and learn this. So what ideally you should do is take a printout, put it in front of your study table, so that every day you are seeing that again and again, and you are reading that and learning that along with writing. So this is also very important. Company final accounts is a chapter which will also be there in the further years. So in your first year, second year, third year, graduation, you will find this. Even going further, you will see this type of format. So it's very important for you to properly learn it and understand where different accounts will go. Now, let's start with the shareholders fund. So for shareholders fund, there are only two main heading, that is share capital and reserves and surplus. So you can see I have written S and R for my name. So that is how I have remembered. Okay, share capital. Now in share capital you have authorized share capital. So authorized share capital will not form part of your outer column. It is just for your information. Then you have issued share capital, which will also be in the, which will also not form part of your outer column, or even if you write in the outer column, you will not take in the total, because this is what we want to issue. But out of that, you have subscribed and fully paid up. So people who have subscribed and fully paid the money, then you have subscribed and not fully paid up. So they have subscribed, but they have not yet paid the money. From that, we will deduct calls in areas, and you remember we used to use a forfeited share or share forfeiture account. The balance of that share forfeiture account will also come under the heading forfeited shares, under the heading share capital. So forfeited shares account will also come under the heading in share capital. Shareholders, in shareholders fund, okay, you have share capital, which is a subheading, and in that subheading you will have all these. Then you come to subheading reserve and surplus. In reserve and surplus, you have surplus as per profit and loss. So what is this? What we found out right now in the statement of profit or loss. So that is surplus less appropriation of profit. So where does this profit go? So it can go to general reserve. It can go to proposed dividend. This is important. It will, apart from this, it will have security premium reserve. Then you have general reserve plus appropriation. So anything if you are adding to general reserve, then you have capital reserve, debenture redemption reserve, dividend equalization fund, reserve fund, worker accident compensation fund is also a reserve, and investment fluctuation reserve also reserve. And if there is any loss, so come to page number 128, you can see this loss amount is written in brackets, so I'll make it red. If there is any loss, we have to deduct it from this reserves and surplus. That's why I've made it red. You can see page number 128, it is written in bracket. So this is a shareholders fund where you have share capital as a subheading, and you have reserve and surplus as a subheading. And in that note number 1, note number 2, you have these various items which you have to remember. Then coming to non-current liabilities. Now you have shareholder fund, you have non-current liability, and you have current liability, which is part of your equity and liabilities. So here I have used this symbol LOL. Okay, so LOL is basically long-term borrowing, other long-term and long-term provision. So over your long-term borrowing means you have borrowed money which you are going to use it for a longer period of time. So that is debenture, term loan, bonds, and public deposits. So in this subheading, in the note number 3, you will have all these if applicable. Then other long term. So what are other long term? Now you have already seen redemption of debentures on premium. So here you have premium on redemption of debenture. When we create this liability account, it is for a longer period of time. So this is recorded in other long-term liabilities. So please be careful. So premium on redemption of debenture, premium on redemption of preference share. So premium on redemption for debenture and preference share will come under other long-term liabilities. Now, over here in long-term borrowings, you can change the order. Okay, that's fine. But this order should remain intact. So third should be long-term borrowing. Fourth should be other long-term liabilities. And fifth is long-term provision. So long-term provision is provident fund, gratuity fund, pension fund, worker profit sharing fund, and worker saving account. So every year from the profit, these amounts are transferred or kept aside as provision for a longer period of time. Now, this is how you have to remember, okay, LOL. So long term, other and long term, but long term borrowing, other long term liabilities, and long term provision. Now coming to current liabilities. In current liabilities, you have this format where you have to remember 4 because 2 shareholder fund, 3 non-current, 4 current liability. So STOS is what I have used, that is save trees and ourselves. You can use whatever you want to. Okay, now over here, short-term borrowing is the first thing in current liabilities. So short-term loan, bank overdraft, and cash credit. So bank overdraft will come in short-term borrowing, cash credit, short-term loans over here. Trade payables will have creditors and bills payable. So creditors and along with bills payable will come to trade payables. Now, other current liabilities. So what are other current liabilities? You have seen in final accounts of partnership firm, outstanding expense, income received in advance, unclaimed dividend. You distributed dividend, but certain checks were not presented. They are not claimed by people. So it is unclaimed dividend. Debenture. In next 12 months, debentures which you have to redeem in next 12 months, which you have to pay off. Premium on redemption, again, which you have to pay off in next, or you can say in within 12 months. I can write it this way as well. Within 12 months, okay. Calls in advance, anything what you have received in advance towards shares, it is a liability, it's a short-term liability. Advance received from customer and outstanding interest on debentures. So these are other current liabilities. And then finally short-term provision. So short-term provision is what? Provision for tax, which we have seen in statement of profit and loss, and proposed dividend, what we have seen over here, proposed dividend. So second effect comes over here in short-term provision. So provision for tax from statement of profit and loss and proposed dividend right from here. So this is equity and liabilities. Now come to assets. Now in assets, okay, you have non-current asset. So I have used this short form to remember TINLO. Okay, so you can make your own this short forms to remember things. Okay, now TINLO is for me is TINLO. Now non-current asset, we know first is always the fixed asset. So fixed asset, tangible. You can see these are the tangible assets. I need not tell you anything about this. You all know this. Then intangible assets. So TI, that is goodwill, patent, trademark, copyright, license, software, franchisee, etc. Then TIN is non-current investment. Now, again, investments are of two categories. One is for a longer period of time, okay, which is there for 3 years, 4 years, 5 years, 10 years, and other is for a shorter period of time. So first is fixed asset, then it is investment, what we used to do in a normal partnership or sole proprietorship. So same thing over here, fixed asset, tangible, intangible, non-current investments, like what? Important, please pay attention. PF investment, debenture redemption fund investment, which we have just seen in the previous chapter, shares of subsidiary company, shares debentures of other company for more than 12 months, FD, government security, units of mutual funds. So this is non-current investment. Then long-term loans and advance. You have given loan for a longer period of time, like loan to employee, custom deposit, telephone deposit, electricity deposit, which is for a longer period of time. Other non-current assets. So everywhere there is this other. So other is what? See, it is very interesting. Debenture discount. So you remember we used to debit discount on debenture account, which is to be written off. So if it is to be written off for more than 12 months, okay, then it will be over your debenture discount, advertisement, expense, and research and development written off in next 12 months or more than 12 months. So this is TINLO, that is fixed asset, tangible, intangible, non-current, investment, long-term, and others. Now come to current asset. In current asset, CIT, CSO. That is how I would like to remember it. Now CIT is Commissioner of Income Tax, also you can remember. Okay, that is also you can remember. You can make your own names. Now current investment, which is less than 12 months, so share, debenture, security, government security, units of mutual fund. Then inventories, Now inventories is interesting. Inventories यानी our stock of what? Raw material, semi-finished goods, finished goods, stock in trade, loose tool, spare part, consumable, goods in transit. So this is inventory. Okay. Semi-finished goods is basically work in progress. Then trade receivable, debtor and bill receivable. So CITCSO. So cash and cash equivalent, cash on hand, bank balance, but bank overdraft will come over here in short-term borrowing. So be careful, bank overdraft, short-term borrowing, but bank balance, cash and cash equivalent. Then checks and draft on hand, which are to be encashed. Then short-term loans and advances. So you have given a loan for less than 12 months, advance to suppliers less than 12 months, and other current asset, which you have already seen in adjustments of partnership, prepaid expense, income due but not received, and then advertisement expense, return of during 12 months, so within 12 months, debenture discount within 12 months, and research and development within 12 months. So this is what you have to remember. You have to write, constantly write, and remember all this present on the screen. Now, at the first glance, you may feel कि sir इतना सारा कैसे याद रखना? See, it is nothing new. So far, you were dealing with majority of them in a T-shaped format of balance sheet for partnership firm and sole proprietor. Just a shift in the format is there because now we have to follow Companies Act. So once you start writing, you start gaining confidence. Now main formats, what we have seen before, they are the most important. You have to remember it. उसमें कुछ भी change नहीं चलेगा. In this, if internally in the note, if you write long-term loan first and debenture later, that is fine. That is allowed. But you should not change the subheading. Okay, subheading should remain the same. So this is how you have to remember the format in the next session. Now we will be seeing some sums which with the help of which your concept of where will each item go, like it will go to which subheading, which main heading, and which balance sheet heading. So that is what we'll be seeing in the next lecture. But before that, balance sheet format, profit and loss format, and this detailed, okay, notes, okay, you have to remember it. You have to write every day, try to recall, write again, and you should be ready when we go for the next session. Because you have seen lots of things today, so what you do is you first start writing with the format of balance sheet, then you write profit and loss. Okay, try to learn them first, and then you can go for this subheading thing. Okay, first learn the main formats, balance sheet, profit and loss, write for 3 times, 5 times, 7 times every day, learn it, and then, okay, depends on you. If you have to write 5 times and you can learn, if you write once and you can learn, it's fine. But remember, board exam paper will not be given to you on WhatsApp. So learn करने की जरूरत ही नहीं है सर, हम manage कर लेंगे. So that will be actual exam. So you learn it, and then you can go to the third part of learning, which is this. And that is why I suggest you that you take a printout and paste it where in your study area or near the mirror where you see yourself every day. And if it was an actual face-to-face class, I would have given you a bigger chart size paper printout for you to paste it somewhere. But unfortunately, right now it's not possible. So I've given you the file. I'll send you a PDF file. You take a normal A4 printout, put it. You also keep one printout in your textbook. So while you are doing the sum, like this, while you are doing the sum, it is there. So in case you forget any time, you can refer this and you can write. Okay, that is what you can do. Okay, if any one of you has any doubt in any of these account, if now you can ask, if not now, later also you can ask.